on home prices.
So you start with,
Like you.
yeah, go ahead.
Oh, well,
No,
you
no, go
did
ahead. I
mention
like
homes as
the
like
where you go.
a do you own a home or not as being a key question to ask about your asset allocation. So walk me through your thinking there, because I think it was mentioned in the context of inflation.
Oh, like just looking at, in terms of like inflation hedges, like, real assets are, at least homes in particular, are a pretty good inflation hedge in the long run. So for me, like there's a big difference between somebody who rents and somebody who owns their house, because, like if you look at even the last 24 months, like the difference between somebody who owns a home in real terms versus somebody who rents is a huge difference now. So like taking this sort of holistic, portfolio approach and looking at somebody's, not just their of course, you want to focus on financial assets, but, people's real assets make up a big chunk of the vast majority of overall assets in the first place. So, commodities in the long run, it's different. They tend to just sort of track the rate of inflation, whereas like, real estate is a really, really specific type of instrument in that it tends to just be a depreciating block of wood on a very scarce piece of land that we're not making more of. And so, especially in the United States, like, kind of going back to our whole policy discussion, like some of the dumbest stuff going on in the United States is the shortage of housing, and like the number of policy errors that you could look back on in the United States and complain about in the real estate market is like, it's like an endless list. Well,
yeah, mostly driven by NIMBY, but I just want to push on this a little bit, because I've had a number of discussions with people about this, because my contention is really that homes now, because we've financialized homes, right? Really, like most homes are bought at like 5 to 10% down. And so they end up basically being like a long duration bond, right? So the question being, if rates go from 2% to 3% to 3% to 4% to 4%, who is the marginal buyer of homes? And what price are they going to be able to pay, given the amortization costs of the mortgage that they're able to secure at at 3 and 4 and 5% interest rates, right? Like, to me, it seems like, and even, if you go back to the 1970s, real estate actually was a not such a good asset for inflation hedging, right? Like, if you look at the real estate indices, they didn't even hold up against inflation, possibly. And the leverage ratios on real estate in the 70s were a fraction of what they are today. Like, that real estate just wasn't, you weren't able to get 90% loan to value structures for buying homes.
But again,
right?
To kind of go back to the, the whole nobody knows nothing, thought process, like, I think there is, like Americans especially, or anybody in the developed world really, has been sort of spoiled by what's happened with real estate. I saw the craziest chart the other day. I had to do like a double, triple check on the data source showing Japanese residential real estate for the last 30 years. And it is unbelievable. It basically went up in 1990 and it has just gone like this.
It fell for 40 years. Yeah.
It's like unbelievable. And I turned to my wife when I saw it, and I was like, you got to see this chart. This is a fucking unbelievable statistic that I had never seen. And you imagine that happening in the United States, and what that would be like if that played out. And so,
look,
like, you're right.
Your point, though,
maybe
Cullen,
real estate will be an awful inflation hedge in the next 20, 30 years.
But the biggest one of the biggest spend on a household is rent or mortgage, right? So if it ends up being a deflationary item, then that portion of, if you're a renter, if real estate goes down and you're a renter, rents will also go down with that deflation, right? If you own and prices go up, then you're the same. You own the house, right? Maybe some property prices go up, but if you're a renter, that's going up. That's going to be a big line item cost. So I see if housing inflation is a problem and it's your biggest expense, and absolutely housing can be a big hedge against that big spend. 100%. I can see that. But the thing that we have to ask is, what is inflation, right? Like, is inflation housing prices going up? I mean, it's just such a complex
what's your bet size?
topic.
Right. The challenge is that it represents this massive bet in people's portfolios, right? They end up with this levered, huge proportion of their wealth invested in this ultra long duration asset. They're trying to hedge shelter inflation, which I get, that's a fair point, but they take on such a massive amount, like the size of the asset on their balance sheet, representing that shelter inflation bet is so proportionate relative to all of the other types of risks that they face.
Well, and the other thing is, a house is a huge pain in the ass. Like, if you applied like a real expense ratio to a house, I would argue it's got to be the most expensive thing anybody owns. I mean, after you back out taxes and like I built my house, and it was as much fun as I had, like learning how to do framing and drywall. Actually, framing was horrible, but a lot of the other stuff was pretty fun. It's a brutally painful process. And so like, I thought I was like being all smart, like getting this great deal on a tear down in a good location. And I paid for this house in all sorts of like non-quantifiable ways that people, when they buy and sell a home, they typically remember the two numbers that, oh, I bought my house for, $500,000 and I sold it for $1 million. And so I made $500,000, and you forget that, you fixed 20 toilets over the course of 10 years and spent, $250,000 in renovations or just upkeep. And, oh yeah, you spent, another, $100,000 on the mortgage along the way, and you paid, $100,000 in taxes over all those years. And so you back out all this stuff, and like the real return isn't that great. And I would argue if you're involved in a house that's really like, requires a lot of manual upkeep, like it's an even worse investment, because
this was years ago, but I remember seeing, I think it was a Schiller index. I can't remember. It was like, what is the actual real return on real estate all in? And it was about the rate of inflation, right?
Yeah.
It's because that's,
I think Thornburg Investments
piece
published something that did a really good study on that. But yeah, and even the dumb stuff, I pull weeds on the weekends and I'm like, I fucking hate this house.